Hello, everyone, and welcome to Traders Lessons, the place where every trader can find their own approach and a lot more information about trading, about the financial world, and the investment world. Today, we're going to do something new for our platform, and this will be to analyze thoroughly one event that just happened into the market. It's a monthly event that can actually bring volatility to the market and an event that can help any trader, any investor all over the world to generate profits, to generate success into the investment world. The event that I'm talking about is the non-farm payrolls, the US non-farm payrolls. I have opened here one of the informational sites that can provide you with data of how the event took place. Just very quickly, what do I mean by an event, by economic event or calendar event? Every single day on the market, there are announcements from different countries, in our situation, the United States, where they give information of how their economy is moving, how their economy is going. The non-farm payroll, in its nature, basically shows how the US employment was moving for the past 1 month. As I said, it's a monthly event and it shows whether for the past month the United States have gained more job places, job openings, or less without the farming sector, because the farming sector brings very big discrepancies into the results. So this is exactly why it's called non-farm. And presently, today, we had the non-farm payroll for the month of October. And as you can see, the forecast was 180,000 new jobs to be opened. Unfortunately, 150,000 were the actual numbers being released, meaning that the job market in the United States is not developing as it should be. It's not developing as expected, which as you can see in a moment, brought high volatility into the US dollar market, and it actually brought lots of movement into the commodities market as well. The product that we will be focusing on will be gold. Gold is a very popular product. I'm pretty sure that everybody likes it, or if you don't like it, at least you've tried it once or twice. And in our courses, in our learning sessions, you can see many, many strategies working on the gold. But now we're going to focus only on how an event, a calendar event, can actually influence the market, can influence the price of a specific product like the gold. Now, today, I'm pretty sure you can now see, today the announcement was made. As I said, it was negative for the US economy, hence negative for the US dollar. The gold and the dollar are connected. So whenever the price of the US dollar is dropping, the price of the gold might rise. And as we can see here, this is exactly what happened. For just 1 hour after the event, the price immediately shooted up. How much exactly? First I want to show you the starting time. It's over here. This is when the event started, when the event was announced. And this is the end of the candle, or let's say the end of the impact for the market. We have it here and here. Now what we're going to do is first to elaborate on why it happened like that. Simply, the US economy now obviously is not performing as expected, which brought weakness to the US dollar. And at that point, when you look at the gold, you see weak dollar and jumping gold price. How much exactly did it move? It's very simple to check. I will try to do it for you just on this one candle. There it is. So only for like 2 hours, even less than that, we had here $18 of movement on the gold price upwards because of the negative data from the non-farm payroll. A volatility like that, obviously, as you can see in the chart itself, cannot sustain. It doesn't have the power to keep moving the price of the gold upwards. It was just an event showing weakness into the price of the dollar that was exhausted, and then the price right now is trying to get back to its normal levels. It may form a figure, may form a chart pattern that we can discuss in our next videos. Just what is happening right now is pretty fresh. We just see it at the moment, and in our next videos we can easily track forward how this movement can develop. But now let's go back to the movement itself. Weak data for the US dollar results on high jump on the gold price for less than an hour, like $20 in less than an hour or two, which is something that every trader can check on the economic calendar of the platform that they're trading with, or on independent source, just like I am checking independent source right now, and take advantage of the movement immediately after the event. Now, something that also was triggered after this big jump, after this high jump on the market, was the so-called overbought level on the gold price. For you to track down the overbought level, you can easily use RSI, or Relative Strength Index. It's an indicator that helps for you to get a signal when is the time to go for buying or selling direction. We have added here the RSI presently, so you can easily see over here the level of the RSI was very high immediately after the jump of $20. The price skyrocketed to 2010 per 1 ounce of gold. The RSI went to over 74. I'm pretty sure you can see the two levels here, 30 and 70, meaning if the price is higher than 70, it's overbought. There is a possibility for the price to drop. And if it's below 30, it's oversold. So there is a possibility for the price to start rising from that moment. Right now, as I said, we had a textbook example of first, influence of an event on the market, second, influence of an RSI indicator on the market price. After the event that was negative for the dollar, immediately the price of the gold jumped. Once it reached overbought RSI levels, it started collapsing back down. Textbook movement, textbook response from the gold to an event as the non-farm payroll. Luckily for everybody who is trading, the non-farm payroll as an event is happening every single month, meaning that every single month you do have the chance to actually take advantage of these US job data. It's happening usually every first Friday of the month. So you can start developing your strategies and your expectations for the next non-farm payroll. As I mentioned, no matter if we talk about this particular event or any other, usually events on the economic calendar, they influence the market for a few hours, and then the price is struggling. It's trying to go back to its normal course. Along with that, once the price is already overbought, the RSI the RSI indicator can easily help you decide, is it time to get out? Like if we play one example, right now you have bought the gold when the event was announced. You see the RSI is overbought. You see the price is no more moving upwards. So obviously there can be the time for you to get out and just call it a day for the non-farm payroll event. I mentioned already there is a pretty interesting figure that is about to be formed on our YouTube channel. You can easily see different trading patterns, different figures forming on the market, well explained. This particular one we will be tracking on our next sessions to see how the gold price responded to the US economy. So this is as much as we can get now for the non-farm payroll. As you can see, it was a short jump, now correction down. Let's see how the market will develop from here on. For all of you that are friends of Traders Lessons, I wish you successful trading. Don't forget to click that subscribe button at the bottom of our video, and I will be waiting you all on our next video, analyzing the movement on the gold after this non-farm payroll event. Thank you and have successful trading.